Good morning, traders. I'm Alex from BCR, and here's your market update for the 13th of October. So, the US dollar weakened late last week, falling below the 99-cent level. This was mainly driven due to renewed trade tensions after President Trump said that there was no need to meet with China's President Xi, even after hinting at raising tariffs on Chinese imports by 100%. At the same time, the US consumer confidence data came in steady, and markets are now pricing in a 95% chance of a Fed rate cut this month. However, expectations for a December cut have recently dropped. On the technical side, the dollar hit a 2-month high of 99.56 last week and still shows mild bullish sentiment and momentum. But there's still concerns over a prolonged US government shutdown and may add pressure for the longer term. Oil's had a roller coaster week, rallying first, then dropping sharply. On Friday, WTI crude fell over 5%, closing at $57.90 a barrel, its lowest since May. Trump's tariff threats raised fears about global oil demand, especially with a potential US economic slowdown due to the government shutdown. Technically, oil remains weak. It's broken through key support levels, and bearish patterns are starting to form. The RSI is near oversold territories, so we might see a short-term bounce, but the overall trend is still soft. Today, there are possible targets of $59 and $59.50. Gold also had a wild ride last week, reaching a record high above $4,000 per ounce before dropping back sharply. It rebounded slightly before the weekend, driven by US-China tensions. Despite that recent dip, gold still had risen over 50% this year, supported by rate cut expectations and global uncertainty. Technically, gold remains in a strong uptrend, but the RSI is in overbought territory. This means a short-term correction is still possible, with key support lying around 3,978, while resistance lies around $4,059. So today's possible targets are somewhere around $4,050 and $4,060. The Australian dollar dropped to a 1-month low at 64.72, mainly due to Trump's tariff threats, which hit sentiment all around China, a major trading partner of Australia. While Australia's inflation expectations have slightly risen, providing some overall support, weaknesses in risk-sensitive currencies like the Aussie continue as the US dollar stays strong. From a technical perspective, the Australian-US pair shows further bearish momentum, testing key support at 64.20. If that breaks, the pair could drop further to 64 or even 63.72. So today's possible targets are at 64.30 or at 64.20. So that concludes today's brief. Watch for key upcoming Fed comments, any OPEC headlines, and any developments in the US political landscape, as they could all be potential market drivers this week. So that wraps up today's morning review. So stay sharp and trade smart.